From the floor of the CME and with Andrew Keene of Keene on the Market, and what an interesting quarter we've had. We're at quad witching expiration today. The S&P is up 9% year to date. We broke a record with it up 10 days, first time that's happened since 1996. But activity is really slow Thursday and, of course, today going into expiration.
Yeah, I mean, the way I trade, there's 8,700 stocks. There's 3,200 stocks with options, so no day for me is really, really slow. So there's always something to be trading. I trade a lot of on unusual option activity. I try to see what the hedge funds and institutions are doing, and I kind of try to mimic their positions. So we've seen a lot of call buying in a lot of the airline stocks, LCC, LUV. I played those to the long side. Those have worked out. Then yesterday we saw call buying in GT, STX, and also Ericsson, ERIC. So I've been playing a lot of this unusual option activity. Even though the market looks a little frothy, we have FOMC next week. The stocks that I'm up, that I've seen the unusual option activity has been working out very well.
So Kramer was talking about the airlines earlier this week, and they did really, really well. Was there anything that you identified in the options market before?
Yeah, and the LCC, when the LCC was trading around 1360, there was a 20,000 lot of the March 14-15 bull call spread bought for 19 cents. Risk on that trade is $19 per one lot. The reward is $80 per one lot. LCC has been on fire now. It's hitting a 52-week high. I bought some April 14 calls for 61 cents. I talked about that in my trading room. Those things got a double on it. I took them off at a double. They ran up to over $2. Also in LUV, we saw some March 12s being bought for 15 cents. I jumped on those. Those went to 50 cents. So these calls have appreciated. We know you can see a 3% move in stock, but you can see calls double in value. Even if implied volatility goes lower, the moves can be so much. And right before, it's interesting, like I was watching Kramer on TV, and then he came out with this piece on the airlines and LCC. Even when he came out with it, the stock popped, and I go, oh, good for me. I'm on these April 14 calls.
Oh, so that was a great call on your part. Pardon the pun. What are you looking at going into next week? What sectors are you thinking about?
I'm still long. I'm long through calls. Implied volatility is relatively very cheap right now. We see the VIX trading at 6-year lows. So can this market continue? We look a little frothy up here. Next week we hear from Bernanke. Is it going to put the brakes on a little bit, take away the punch bowl? But I continue to play this through long calls so I can define my risk versus reward. So even if the market does sell off a little bit, a lot of my positions actually, like Ericsson calls are till July. I'm long some ETFC calls to January. Some other calls that I usually play in the front month are actually a little bit longer term, July of 2014. So I still think the market's going to go higher.
Yeah, we see a lot of trades on that, particularly on options profits where we're writing out longer dated positions. Tell everyone how we can find you in the virtual chat room.
Yeah, you can email me at Andrew@KeeneOnTheMarket to get into the live trading room. I trade unusual option activity, trade 6 to 10 trades per day in there, real time with real money.
Okay, great. Thank you, Andrew.